currency debasement, as well as the widening inequality, which leads to greater polarization, which leads to greater political instability, which leads to chaos, and hedges against chaos, Bitcoin and gold. The US government is not going to be able to stop Bitcoin. This is heading into that dreaded word stagflation, which is not off the table for next year.
Hi, and welcome to Speak Up. I'm your host, Anthony Scaramucci, and joining us today as my guest is Noelle Acheson. She's the author of Crypto is Macro Now. That's an amazing newsletter which is at the intersection of macroeconomic trends and the cryptocurrency markets. You can find Noelle at Noelle in Madrid. And I was saying to her before we joined the broadcast, I love the Twitter handle. So give us the genesis of that first before we get into the show.
Thanks so much, Anthony. It's so good to be with you. Big fan of the show, long-time listener, first-time caller. The reason I chose Noelle in Madrid, because once upon a time I had grandiose dreams of one day also having, Noelle in London, Noelle in Tokyo. But I love Madrid so much that this is where I spend all my time now, have for many, many years, and hope to continue to be able to do so. It's a gorgeous city.
Yeah, well, one of the most beautiful cities in the world, one of my favorite cities. And I just want to read a little bit of your bio for our listeners, okay? Because you have an unbelievable amount of gravitas in so many different areas. But you were previously the head of research at CoinDesk and Genesis Trading. Lots of in-depth analysis there on crypto and the digital asset sectors. You have 15 years of experience in the financial media and markets, and you're recognized, obviously, as an expert at explaining these very complex things to people. But there's a lot going on in crypto and there's a lot going on in macro. And we both know that things like Bitcoin and other crypto assets are macroeconomic potential investment plays. And we're going to talk a little bit about that. And you have this premium email, which goes out. It is Crypto is Macro Now. And it's market commentary, news commentary. And then you have a free weekly email focusing on the deepening overlay between these ecosystems, the crypto ecosystem and the traditional market, and centralized structures where a lot of these centralized structures, like I know, are about to be wrecked by all of this great technology once we can get past some of the regulatory nonsense that we see in the marketplace. Okay, so let's get into it if you don't mind. I want your personal journey into finance, if you don't mind. How did you get into finance? Me, I was a poor kid from Long Island. I thought a pathway to riches was to get into finance. That's how simplistic my ambition, and that's how shallow I am as a human being, Noelle. So I just figured I would open up with that. How'd you get into finance?
Do not believe for a second you're shallow. Nice try. It's about numbers. I love numbers. I'm a maths major, I have to confess. Numbers are clear. They're correct as well. You got a 7 is a 7 and the maths equation is right or it's wrong. And when I was young, that felt like a very appealing view on life. But then I started to realize that numbers without a story behind them are actually pretty cold. And narratives, the story with people and puzzles, that's where the fun starts. And if you're going to marry numbers with narratives, well, that's basically economics, isn't it? And then markets are the manifestation of that. They're the expression of the confluence of the numbers and the narratives. So that was how I fell into finance. It has been a journey. I was in TradFi for 10 years, corporate finance, fund management, research. I ended up doing fund management in Spain, where I am now. Had my first child, left that because managing futures and options is not really compatible with breathing. And then I set up one of the first e-commerce companies in Spain back in the year 2000, ran that for 13 years, sold it 2013, figured out, okay, what's going to be my third career? Was sitting in my parents' living room in January 2014 in London and reading about what had been happening in the world when I wasn't paying attention, interested in finance, interested in technology, and I kept hearing about this thing called Bitcoin. And I hate not understanding something, since I'm an analyst, I guess. I watched a video on Khan Academy. I don't know if you remember Khan Academy. They were so cool. And when I realized that what I was looking at was permissionless payments, I got goosebumps because I grew up in Central Africa and Zambia, and just thinking what it could do in that part of the world, I just dove headfirst into researching that. And the more I researched, the more I realized how complex it was going to be. And also just how this was definitely what I wanted to spend the next, few decades of my life on.
So You're a lot smarter than me. Let me explain why. Because I was introduced to Bitcoin in 2014. And I was actually introduced to a gentleman by the name of Hal Finney, which I'm sure you
Of course.
know who Hal is. And for our viewers and listeners, he was the first person to receive a Bitcoin from the Satoshi Nakamoto wallet in terms of a transfer. Hal was a great computer programmer. My friend Peter Diamandis introduced me to Hal in 2012. And they were explaining to me Bitcoin. And I looked at them like they were three-headed monsters. No, I had no idea what it was. And so, what did you see? How did you see it? What was your eureka moment?
You've met Hal Finney. I didn't know that. That is absolutely awesome. I mean, talk about an OG. I mean, you are now the OG because of that. My eureka moment was that the
No, I'm
technology.
not, though. I want to interrupt you. I got into Bitcoin in 2020. I wasn't smart enough.
You were
I
in the
wish I
room.
had.
You were in the room in
I
the
wish. I
early
wish I had
days.
understood it better. But unfortunately, I was an old geezer, and I was institutionalized, and not just a mental institution. No, I'm talking about being
Not
an
just.
institutional investor. And so I missed one of the great transformational things that are happening this century. But go ahead.
It's really hard. I mean, and you and I talk probably every single day to traditional investors who will tell you it's never going to work or it's just a risk asset. It's not. I mean, it's hard to get out of that. I'll give you a personal anecdote. I'm married to a traditional investment strategist, and it took me a year of dinner table debates to finally get him to finally get the Satoshi to drop, as it were. And of course, now he's all in. When they were along the lines of, yeah, but what backs it? And yeah, but what backs the dollar? Anyway, went round and round, and that eventually came through. But you were asking what I saw in it. It was the technology. I didn't rest until I understood how the technology worked, because we've all heard so many times, and I'm sure you probably thought this when you were talking to Hal back in the day. Decentralized, yeah, right. Seen that before. Know about the e-cash, and it's centralized somewhere, right? Because pure decentralization is just not possible. And this is a humbling reminder that what we think today is just not possible may well be possible one day. And I studied the code. I made sure I understood how it worked, and I realized that holy shit, yes, decentralization is actually possible with this way. We have a way for the network to pay itself. That was always the point of vulnerability before. And of course, permissionless payments, not really practical when people aren't familiar with technology in the first place. I mean, permissionless payments actually need rails to move on. People need to be familiar with the concept. And in many cash heavy societies, especially in the global south, that's not really practical. So the more I researched this, the more I realized that permissionless payments, okay, there's a lot of barriers here. But what I was actually looking at, and this is where I got another set of goosebumps, was a new type of marketplace. And marketplaces, again, just the ability to spin up marketplaces pretty much anywhere in the world, that is in itself very powerful, because marketplaces are a force not just of redistribution, not just of price discovery, but in theory, markets should be a force for freedom. And we can agree that they've grown up gated and therefore they're not really fulfilling their potential.
So, you know, I don't know. I learned about finance in an old school sort of way. Some professor told me in 1985 that interest rates are the physical gravity of financial assets. If they're lower, the asset prices will levitate higher. It has to do with discounted cash flows. And it was a very, very boring lesson, but it did help me on my path in the world of finance. What would you say the impact is of interest rates today? Is it the same as it was 40 years ago? Are there other macro things that are happening in the marketplace? There's lots of technology that we have today, which is disinflationary. I know we've had a spasm of inflation here, but I think most people would agree that was related to the COVID-19 pandemic and some of the monetary and fiscal policy that got imposed globally. But what are your thoughts on where we are with inflation? What are your thoughts on interest rates? And how important is Federal Reserve movements one way or the other?
That is such a fascinating question, such a deep question, and such a good question to be asking now, because things are changing on pretty much all of those fronts. One of my favorite sayings, which is incredibly annoying to anyone who will listen to me, is everything's relative. And interest rates are the financial gravitas when there's just not a lot of other competing forces for attention and money. And now that we have discovered, Anthony, that deficits don't matter, and yes, I'm being somewhat ironic here, but yes, now that we have discovered that deficits don't matter, do interest rates still matter? We have now embarked on an easing cycle. And is this really going to provide the liquidity stimulus that the market seems to be expecting when the tightening cycle didn't tighten market liquidity at all? Financial conditions, according to the Chicago Fed, even before we entered the easing cycle, they were as loose as before the tightening cycle started. So we can argue that the monetary policy is not having the impact it might have once had, now that we have discovered that people actually don't really want to talk about the deficit anymore. Have you heard any of the candidates mention it?
Yeah, it's interesting. Yeah, no, I think, yeah, I no, I mean, I think this is one of the things. I mean, I'm going to get to the debt crisis in a second, but yes, no, I think we're in total agreement, and so that begs the question. Then, how do you feel about things like central bank digital currencies?
They're political. They are purely political, and not even domestically political. They are geopolitical in some instances. Obviously, the United States is not going to have a retail central bank digital currency because that's a political third rail. Europe will have a retail central bank digital currency, but no one's going to use it. China already has one, and they will do whatever it takes to make sure people use it. This is a very interesting example, actually. China has one. It's got several pilots. It's rolling them out. And it's had a big jump in transaction value as well, but we don't really know who's using that and why. China has been struggling to get adoption. It's tried paying public workers in the central bank digital currency. They immediately converted at the bank, so no one really wants to hold this. And if China can't get it, the use case going, then really who can? But it does become a geopolitical tool, and obviously China does have other goals perhaps in mind, I should say, that with the CBDC. Europe's goals in getting the retail CBDC off the ground, well, it just feels it needs to remain relevant. They actually have said this. The European central bank officials have said, yeah, we just need to remain relevant. And for the United States, obviously different equation whatsoever. India's struggling. Thailand has a sort of CBDC. It's not really one. It's wholesale CBDC. Now that's the geopolitical tool. That is super interesting what's going on there. There are very few central banks that aren't experimenting with wholesale CBDCs and the connections that they can trigger. And especially at a time when the United States is increasingly weaponizing the dollar, there are many nation states that are scrambling to find an alternative.
Okay, tell our viewers and listeners what a wholesale CBDC is. What does that mean?
It's between banks. And this is why it is so much easier to get approval for, to get acceptance for, because actually is a pretty good idea. Right now, transcending money across borders, if anyone's ever tried it, it can take days and it is horrendously expensive, and the transaction can be stopped at any time. But with a wholesale CBDC, it's on a digital ledger. It takes minutes, it takes seconds, and the conversion between the different currencies can be a question of smart contracts. So for a wholesale CBDC can grease the wheels of trade. That's a very corny saying, but it really can. It can grease the wheels of trade. And here's the kicker, Anthony. It can do so without touching the dollar system. There's a fascinating project underway at the moment between this sort of run by China, but under the guidance of the BIS, the central bank, set up by China. The blockchain was built by China, but also the central banks of Hong Kong, Thailand, the United Arab Emirates, and also now Saudi Arabia are trialing wholesale CBDCs, swapping amongst each other, actually even testing cross-border commodity trades, settling in wholesale CBDCs. And you got to ask yourself why.
So, I first of all, I think it's a brilliant exposition, and thank you. A lot of people are just not familiar with all these terms yet, so that's why I'm asking you. The macro trends. I'm not a macro trader, but I've been an observer of the economy for too long, actually, almost 40 years. But I feel like the United States is still numero uno in so many different ways. And I think as a country, though, we have a tendency to denigrate ourselves. Now, we are running a big deficit. And so I'm going to ask you three things. Okay. Number one, Is the United States numero uno in your mind in terms of economic growth, innovation, entrepreneurship, business startups, etc.? Yes or no? And if it's not, who is eclipsing the United States? And then number two, we are spending a lot of money on deficit spending. Does it matter? We've had people come on and say, it doesn't really matter because everything's denominated in dollars. A gentleman by the name of Brent Johnson came on a few weeks ago and said that the fact that everything's denominated in dollars in most places of the world doesn't really matter. So does it or does it not matter? And then the last one, and the most important one, how do you play that from an investment perspective, whatever your views are? So step one, tell us about what you think of the U.S.
Okay, great. Thanks. I would say I have a terrible memory. Well, I remember all three in their order. But yes, the short answer is yes, the US is the best place still to set up a business, unless perhaps you want to set up a crypto business. That's a different question. Yes, it is the world's strongest economy. Yes, it does have the strongest protection of law for any ideas you may happen to come up with. So yes, the US is definitely still the leader on that. And a lot of the, I guess, pearl clutching, if I can use an old phrase, that we're seeing is fear of losing that. Fear does, of course, get the clicks, as you know. And so a lot of people are paying attention to this risk. And it's an important risk, especially with the weaponization of that power. We're seeing the weaponization of that power not just through denial of access to the dollar system whenever a company, even in a friendly jurisdiction, does something that does not conform with US policy. We're seeing that also militarily. The US is flexing power, and eventually, for instance, Trump's threat to implement 100% tariffs on any country moving away from the dollar. We have no idea what that even means. But eventually, the kids in the playground don't want to play with the bully anymore. And now there is a new technology in the marketplace that does make it possible to develop alternative systems, not necessarily replacement systems, but alternative systems. And in the end, choice is the greatest luxury there is. Jurisdictions, nation states, and even trading blocs, as well as individuals, they have a choice they didn't have before. And this is going to terrify the United States because it understandably sees that it could be losing power here, or the United States can embrace it and decide to build the necessary infrastructure, help it develop, and therefore get an inside leg, an inside lap into the development of what could otherwise end up being a competitor. No, I do not think Bitcoin is going to replace the dollar anytime, nor should we want it to be honest, but it does provide an alternative that didn't exist before.
Okay. I worry about the deficits a lot. And I don't know why, Dick Cheney, he's in the news lately. He once said that deficits don't matter. I look at it and I say, well, if the dollar went from $35 an ounce to US dollar, $35 an ounce to 1 ounce of gold, 1971, to gold now being at an all-time high, 2000, let's just call it for the sake of this broadcast, $300. We've knocked the dollar down 98, 99%. That kills the working class. That kills the middle class. And I think the deficit has something to do with that because we're making more dollars to pay back the deficit with dollars that are worth less than the ones that we borrowed. What's your reaction to that? Am I wrong about that? Maybe I'm not looking at it right.
No, I think you're totally right. They don't matter until they matter, just like pretty much everything, right? And they will eventually matter because of the widening gap of inequality that you've mentioned. Right now, asset inflation is increasing the inequality. Not everyone has the assets, and those that don't have assets are just getting hit by inflation. And if indeed we do end up with a weaker dollar because of that, then that's just even more inflation. And so yeah, you've probably heard Lynn Alden has been she's been famous for getting this meme going. Nothing stops this train, and yes, I totally agree with that. Except it does eventually have to stop. Eventually, the railroad runs out. Eventually, the engine plunges into the ocean, right? And that's going to be pretty ugly. Brent Johnson is totally right. And I follow I've learned a lot about the dollar from him. He's totally right when he says that it's still, the best asset out there. As Luke Roman says as well, the dirt is the cleanest shirt in the laundry basket. that is true. That is probably likely to continue, again, especially given its economic vibrancy compared to many other jurisdictions. But again, there is a choice now. It can still
Hmm.
be the leader, but have a weaker influence than it used to. And that is not priced in yet.
Hmm. All right, give me the three. Okay, everything you just said, obviously, I'm in sync with you. So we like to ask our guests for actionable ideas. So everything you just said, what are one or two investments actionable? I've got some spare change in my account. I want to put it into something. What would I put it into?
I should say I'm not a professional investor, but I can disclose what I personally have been investing in, and that's Bitcoin and gold, because I do think this train eventually will run out of railroad. As I said, we do have runaway deficits. I don't know what's going to stop it. This does mean currency debasement, and not just in the US. We've got Japan bumping up defense spending. We've got Europe that, Mario Draghi's report a while ago was talking about. We need to spend another 800 billion euros a year on energy and defense. And in a fragmenting world, everyone's going to be bumping up what they spend on defense. It's not optional, right? And even the US Congressional Budget Office has the deficit just climbing, climbing, and climbing. We are already, the United States, I should say the United States is already spending more on interest payments than it is on defense. And the CBO projections assume that the defense spending's not going to have to pick up. So the deficit's going to be even worse than it expects. So currency debasement, as well as the widening inequality, which leads to greater polarization, which leads to greater political instability, which leads to chaos, and hedges against chaos, Bitcoin and gold.
Okay, I mean, and both are doing well. Both are great assets, and I own a lot of Bitcoin, not that much gold, but I do own some gold. And I like gold. I like gold as an asset class. And I'll just point out to people that gold over the last 2 years has outperformed the 500 best companies in the world. So there you go, right?
And
You know,
that's telling us something, isn't it? Gold is sending a message. Bitcoin has not caught up with gold by any means, even though it is regarded by many investors as a digital peer, because it has so many other things going on as well. It has the political lid at the moment. The uncertainty is not helping it at all.
yeah.
Uncertainty around rates, uncertainty around growth. But Bitcoin is a risk asset. It is also a long-term hedge. This is something that so many, and I don't know how long it took you to figure this out, but it's hard for people to understand that something can be a short-term risk asset, but also a hedge against chaos. How is that even possible? And it's all about time frames.
Listen, I think it's well said. And I think Bitcoin's obviously been the best performing asset over 14 years. But you would think at this level of its maturity, if gold's at an all time high, Bitcoin should be. And it's not quite there at this moment. But, we're both bullish. Let's see what happens. We know that these things, the markets don't run on appointment or a time schedule, but they are weighing machines in the long term, as Buffett once said, right? They may be voting machines in the short term, but long term, I think we'll be okay. Before I take audience questions, I want to ask you one more question. Do politicians matter?
Love that question. Yes, they really, really do. They matter not just for economic expectations setting, and we've seen a lot of that in the US presidential campaign so far. They matter for your economics expectation setting. They also matter for just how much a population can be inspired to withstand discomfort in times of adjustment. I mean, a case in point is Argentina. I mean, to vote in a government that has said, I am slashing budgets and there will be a lot of pain, to vote them in. One says how bad things got, and God forbid that any of the economies that we live in should get that bad. But it says how bad things got, that they were voting for pain. But two, they did so because of the force of personality, because of the hope one particular politician delivered. And I'm not necessarily singing his praises here. There have been, many unfortunate side effects of this, but still, we can look at that as a case in point of why politicians do matter. Because if not, people are going to continue to vote for convenience. They're going to continue to vote for, yes, just give me more money. This worries me a lot about, and again, this is slightly off topic, but it does tie in slightly to what you brought in about the central bank digital currencies, and that's the idea of universal basic income that is starting to get some traction again in some circles. And again, who would not vote for free money? Yes, please give me more free money, but then how do you vote that party out?
You know, it's an interesting thing. I mean, I would say policy matters, right? And tax policy matters, right? they limited the state and local income tax deductions in the United States, and the blue states that have heavy safety nets. A lot of people said, "Oh, okay, well, I'm going to migrate to a lower tax state." We had 500,000 people leave New York. So policy people, politicians, they matter, right?
Do you think that tax is political or is it also influenced by other factors?
It's a good question. I have to think about that. So, I'm gonna say that the big driver for me, and again, I could be wrong, and maybe this is me being a businessman and business centric, but the big driver for me is tax policy. I think tax policy is the central root of all policy, because people will move their behavior pursuant to taxes. And said differently, I live here in New York, so if I make a dollar, 52 cents goes to my government. That would include Kathy Hochul and Joe Biden. 48 cents goes to the Scaramucci family. So I'm a minority partner in my own life. My majority partner are the politicians as a result of tax policy. And so some of my friends have said, I don't really like that. I'd like to be a majority partner. And they've moved down to Florida where it's now 60-40. So,
That's
so
a
to me, I
really
think
interesting
this,
way of looking at it. I hadn't thought of that. That's really interesting. But then the more people that do that, that also changes Florida's economics, which might in the end up impacting its tax policy.
oh, yeah, no, so they're going to turn Florida blue because people are going. It'll lead to more economic growth. It'll lead to more poor people. See, people forget this. Why do you have these high tax states in the port cities? We get a lot of poor people show up at the port, and you need a safety net. And one of the big economic achievements for the United States is the great immigration story here. We have very poor people that can show up here. Sergey Brin, he's a refugee from Eastern Europe. He goes on to be worth $100+ billion, develops Google alongside of Larry Page. And we can name hundreds and hundreds of people, Andrew Carnegie, throughout the course of economic history in the United States that come penniless and go on to be quite rich. But in these port cities, they're blue for a reason. They are teeming with poor people, and sometimes poor people need a little lift or a little help to get to the starting block in the country's capitalism. And so I thought it was a mistake to reduce or limit that state and local income tax, because what people tend to forget is the economics. The port cities like New York, Boston, Philadelphia, San Francisco, et cetera, they're the economic engine for the country. Okay, and they percolate all of the economic activity and innovation throughout the country. I'm not saying you can't have economic innovation in the center of the country, but just study the country, and that's how it's by and large been. So, but hey, listen, what do I know? Tax to me is the central policy. You get the taxes right, and you motivate people through the right incentives, you can create a lot of economic growth.
That is interesting. Do you
Um,
think it's changed in the US? I'm asking you questions here, but I'm interested. Do you think it's changed in the US over the decades, the importance of tax policy?
Well, I think the way they tax has changed. I think it started out as that, we're going to tax you, and this is literally a bill for services. Your tax represents a bill for services. And now it's like we're going to tax you, and it may or may not be a bill for services, but it's going to be policy. It's going to be political policy. We're going to tax you in a way that's going to foment or create political policy. So if we don't want a big corporation like Amazon in Long Island City, well, then we'll make sure the taxes are such that they won't be able to arrive in Long Island City, even though that would have created an unbelievable amount of jobs in the city of New York. There was a group of progressives or socialists. They didn't want that big business here. They want the business to benefit from those tax breaks. And so they spited themselves by not allowing for that business. So listen, I mean, there's I don't know. I think it become very political with the tax policy. It's no longer a bill for services.
And not even just income tax, which would be technically a bill for, but things like inheritance tax, which influences real estate
Sure.
investment, etc. Here in Madrid, for instance, there's no inheritance tax, which means you get downtown in beautiful old apartments, young people living next to old people, because the young people who inherit these apartments from their grandparents don't have to sell it to pay the inheritance tax.
Yeah. Yeah. I agree. I know, it's fascinating. All right, we're going to take some questions if you don't mind.
Of
All right.
course.
You look great, by the way. I love the shot. Okay,
Thank you.
that's got to be a very popular room for you. All right, let's take questions. Noel, do you think we'll see faster crypto adoption in the developing world versus the developed? It's a great question from Greg in California.
Greg, that is a brilliant question. And I'm going to nitpick slightly and say by adoption, we have to separate out what we mean. Adoption for speculation, developed world, large markets, ETFs, trading, derivatives, etc. That is a type of adoption. And that's largely going to be not necessarily just in the developed world. I mean, for instance, many traders in Nigeria, for instance, India, etc., very happy to try and make their money as they can trading. And now, but adoption for store of value, that probably makes more sense if you are living in a country with 70% inflation, and such as, I'm thinking Turkey, I'm thinking Nigeria, I'm thinking many regions in the global south. That's a different type of adoption. And adoption for payments, I mean, we can sit in our comfortable financial jurisdictions and say, why would we use Bitcoin to make payments when we have so many other better solutions? But many people don't have better solutions. And even Bitcoin, with its 10-minute wait and its relatively high fees at times, is better than what they have, and they don't have to ask permission. So it depends what you mean by adoption. Adoption for speculation, that's probably going to continue to grow faster in the regulated markets as we have seen so far. But adoption for many other reasons, including the technological development we're seeing, that's probably going to be outside of the US.
Very cool. Let's go to the next one. Brent Johnson told Anthony that the US dollar is the government's ultimate weapon and that it conflicts with crypto. He did say all of that. And he also said that we don't have to worry about these deficits because everything in the ecosystem is dollar dependent. What's your opinion of all that? Sion from Florida.
It's a conflict in the very short term. It's a complement further down the road. The US government is not going to be able to stop Bitcoin. It could tax it into oblivion within its shores, but Bitcoin is going to continue to flourish elsewhere, obviously at a lower price because there'll be lower demand, but it would still continue to flourish. And I think the United States is eventually going to realize that. The more that the United States would try to push Bitcoin outside its boundaries, the better the case it makes for why it is a good asset to hold outside the system. The more financial oppression that they try to use to quelch its adoption, the more appealing it will become. And I do think the United States is smart enough to realize that. And so it will eventually end up embracing the innovation that Bitcoin can bring, not just for things like data storage and some smart contracts and some tokenization, but also for its impact on market infrastructure. It is a financial innovation. Let's face it, the United States has the world's largest financial market because it has traditionally embraced financial innovation. Compete with the dollar, maybe now, sort of, not really. Medium, long-term complement.
Okay, well said. We'll leave that there. Let's go to the next one. Noelle, do you think crypto assets like Bitcoin will increasingly correlate to traditional assets like gold? Alex of Ohio.
I think so, yes, longer term. But the thing we have to remember is that the price is always set by the last trade. And for many, Bitcoin is a speculative asset and there's a lot of churn. We've got the high frequency traders, we've got the day traders, we've got the short term position hold, momentum traders, etc. They are involved in the Bitcoin market and they generally are one leg of any trade on any given moment. And so the short term viewpoint, which is generally speculative, sets the price. And that for now seems to be very tied to liquidity expectations. Incorrectly, in my opinion, but there you are, tied to liquidity expectations. But longer term, zooming out, Bitcoin is a safe haven. It is a store of value, much like gold. You also get a lot of people insist that gold has intrinsic value, it has industrial use, and Bitcoin is useless beyond the Ponzi game. That's actually not true. Bitcoin is a technology. It is an evolving technology at that. There's a lot of work going on Bitcoin DeFi. Even Michael Saylor is working on building a decentralized identity solution on the Bitcoin network. There's a lot of technological development going on in Bitcoin, which suggests that we're underpricing block space. But it also reminds us that we as human beings are terrible at knowing what new technologies are going to be used for. And as this becomes more widely spread, as we start to understand its potential better, then that is going to change its correlations, in my opinion.
Okay, we're gonna get one last question in there. I know we have to get you back to Madrid and away from this show that we love doing. Let's go to the next question. Okay, for Noelle and Anthony, what's your outlook for the economy? Do you think a recession is in the cards for 2025? So since you're the expert, tell me what you think first.
I have been calling for a recession for some time. I've been wrong, so I say that as a caveat. I do still think that we are going to have a very sharp slowdown next year, more than most are expecting, because while I don't think the jobs market is collapsing right now, I do think the fears of that are being thoroughly overblown. When unemployment starts to move, it moves fast. And that is going to impact consumption, which is going to impact revenues, which et cetera, et cetera. And all of this at a time when inflation is going to have a very hard time coming down much further from where it is now, in my opinion. And this is not a good recipe. This is heading into that dreaded word stagflation, which is not off the table for next year. So I'm pessimistic for next year's economic outlook. I do think all of the expectations of strong growth are wildly overdone. Full blown, deep, deep recession, I would have said so definitely a few months ago. Now I'm not so sure it'll be that deep. What do you think, Anthony?
Yeah, so I think we are, because I think the Fed is behind the curve. They should have cut rates. I think they don't want to be perceived as a political beast. Alan Greenspan raised rates going into the 1992 election. He was roundly criticized. There's been other times where the Fed has either raised or lowered rates pursuant to their independent streak that they've been called political. And I don't think they want to be castigated specifically by Donald Trump. So they haven't lowered rates to where they need to be lowered, and a result of which they are going to tip us into a recession. But I am in agreement with you that it'll probably be a shallow recession, and it'll probably be a good time to buy assets if they weaken. But I want to give you the last word. So, and I'm gonna put it to you a little bit. Okay, and I'm sorry to do this to you. Don't be mad at me, but I want a
Never.
price prediction. I want a price prediction on Bitcoin, Noelle, before we leave.
Sure, I can do that. Up. How's that? Up. That's
All
probably
right.
the best I can do. Timing. I think we are in for some fairly bleak,
So
disappointing, frustrating months.
when is my Bitcoin going to reach 150,000?
Yeah, funnily enough, that's actually not out of the question. A journalist asked me the other day, why do experts keep making outlandish predictions? It's going to reach 100,000 by the end of this year. But I did some numbers. For it to reach 100K by the end of this year, it has to go up per day by 0.45%. That's it. And that's not out of the question. We also know, you've seen this before, we know that when Bitcoin starts to move again, it's going to move fast because, as you know, it's got a hard cap. And when the world starts to pay attention, then there's going to be a scramble because there's not a lot of Bitcoin available. A lot of it is already socked away in long term wallets. So it's going to be a scramble for something that does not have a flexible supply, no matter what the price. And this is actually a difference between Bitcoin and gold, and not everyone understands. If gold got to 100,000, then we'd be mining asteroids, we'd be squeezing gold out of seaweed, we'd find new production methods at a new price, they would become profitable, and that would impact the supply curve for gold. But Bitcoin does not care what the price is. Nothing is going to change its supply. So 100,000 by the end of this year. Again, this isn't my official prediction, but it's really not out of the question.
Okay, I love that prediction. So I'm going to leave it there. It was very, very wonderful to have you on the show. You're at Noelle in Madrid. That is the call sign on X, and it's Noelle Acheson. I think hopefully I'm getting close enough to the right pronunciation. But remember, I'm a Long Island from Italian American from Long Island, so you're never going to get the pronunciations right with somebody like me. But you're
It's
a terrific
great.
guest. I hope you'll come back. And Noelle is the author of Crypto is Macro Now, which is an award-winning premium newsletter. Thank you so much for joining us on Speak Up.
Thank you so much, Anthony, and I hope to see you out in Madrid soon.
Yeah, absolutely. If you like this video, you'll like this video as well. Check it out.